Hey traders, checking into the stock market today. So pretty much a market-wide bounce today, but still staying a little skeptical in the short term just because we haven't confirmed hourly trend changes in a lot of places, which means the bounce needs to follow through tomorrow for those hourly trend changes to confirm and for the bulls to gain a bit of confidence back. Today certainly was a confidence booster, but we need more after the amount of weakness we saw last week. I'll show you exactly what I mean on the charts with these hourly trend changes required. So today was another important day to have a distinction between SPY and the S&P 500 futures, because on SPY we broke the high of yesterday and ended with a bit of an upper wick as hourly consolidation took place into the close. We pretty much had a day that was marked by complete bull control in the morning, a slow grind up that was a 5-minute rising wedge, but those of us bears that were attempting to get positions based on this rising wedge, it was a bit frustrating because we just kept grinding higher for a long period of time. But we did finally roll over into the close, into hourly consolidation. And this is a rising wedge bear break. But if you look at the S&P 500 futures, it's more clear, in my opinion. Just like yesterday, SPY broke the low of the previous day, and the S&P 500 futures did not. It was a daily inside bar. And look at today again. We bounced right off the low of yesterday, and then we rejected right from the high, forming a second daily inside bar in a row. So for me, that's crystal clear as far as levels to be watching. And on the 4-hour, it's a potential tightening range. So I'm viewing this as a resistance level, the low, lower high, higher low, and now another lower high potentially shaping up. And if we open lower tomorrow with some overnight trading downside, we'll have this really nice 4-hour equilibrium to be watching for the rest of the week. And it will break before the end of the week because we've still got 3 trading days to go. So I like the S&P 500 futures chart for clarity with multiple daily inside bars, and the bulls still have proving to do. Again, for most individual names and sectors, the move from the low of yesterday went straight into this morning move. We never changed the hourly trend. SPY went from 426 to the high of today, and this is why the movement tomorrow is so important. We must confirm an hourly trend change if we're going to believe that these bounces can follow through on the daily time frame. And if you look at QQQ, same deal, straight from the low of yesterday. XLF, same deal, straight from the low of yesterday. XLF is a bit different, but individual names have that as well. Amazon, low of yesterday, high of today, no hourly trend change confirmed yet. The bulls must prove it with follow through tomorrow. And if we do not break the highs of today tomorrow, the bears stay comfortable in the short term. NASDAQ futures, daily inside bar. 4-hour time frame, solid move, but a lower high being set. What the bulls are hoping for is that this is going to shape up as an inverse head and shoulders, which would mean if we fail 14,851, as we're currently doing, if we follow through with pullback tonight, the bulls must show up tomorrow and confirm a 4-hour trend change for a daily bounce to get going. So more is needed. Nice green day today. More is needed. And then from there, we're going to zoom out and look for a lower high on the daily time frame for QQQ. Financial sector, good day for the bulls. It's a good day for the bulls because yesterday was a bit sketchy as far as the potential to confirm a daily downtrend shaping up. And looking at our higher low on the daily and yesterday's candle, we were coming close down towards that level, but bulls right back up to the high, which is again a great sign for the broader market bulls because we have our lead sector. We are currently 1.5% from all-time highs. So a little bit more green, and we're going to be talking about potential all-time highs in the financial sector, and Bank of America, BAC, is already hitting all-time highs as it's one of our lead bulls in that sector. So again, there's little clues out there that are keeping me confident. I've had the opinion that the S&P 500 is just going to give us a monthly high or low. Crypto is breaking out with Bitcoin testing multiple week highs. The financial sector is strong. The energy sector is strong. Oil is strong. So there's all these little clues that have us saying, okay, well, this isn't fear, and we're not looking at, a big collapse and a bear market about to take shape, as long as those little clues continue to present themselves. So that XLF daily high or low is real important to me for the next couple of weeks. If 37.49 is holding, the bulls have control on the daily time frame for the financial sector. Healthcare is still weak. Rejected from the high of yesterday, double top by 4 pennies. Inside bar must break bull. We did not change the hourly trend to the bulls. They must do so tomorrow. This is our weakest sector as far as the significance of the pullback, the daily RSI getting more beat up than most places, and again, not proving much today. Need more proof tomorrow. IWM, inside bar bull break, but we failed to break the high of Friday, so still viewing this as a tightening range. High, low, lower high, higher low. So this is now the line in the sand. Bulls must hold 218.93 because if that level breaks, the bears are going to be taking back over in the short term. And as long as we are within this range, then not much is going on. And bulls certainly want to get back closer towards resistance. But this is an important longer term one to be watching for growth names and IWM. We know some growth names have already broken bearish. Growth names overall have been a bit weaker. And if IWM breaks bearish from this daily tightening range, that will likely continue. Biotech sector, inside bar today. Inside bar yesterday, inside bar today. We actually broke support by 8 pennies, but essentially a second inside bar. But just a clear pattern of a lower high every day for 6 days. And if that pattern doesn't break, then the bulls aren't going anywhere. And again, XBI has been trading correlated to IWM and growth names, but much weaker over the last few days. And perhaps the healthcare weakness having an impact there. MJ sector, so a little bit of green out there. Bulls still have proving to do. I need to see MSOS over 31.88, our little daily lower high here, if we're going to see momentum shift back in their favor. But it's a sector right now that's continuing to trade on headlines. Another headline came out today where New York, which was a very limited medical state, and recreational is already passed, but it's not going to go into effect until 2022. But they just expanded and said, okay, well, it's not just extracts right now. We can sell flour. And so that's opening up the potential for revenue. So the bulls reacted to that news in the sector. And you can see here on the 5-minute time frame, big spike up. That just shows the lack of liquidity. TLRY on the 5-minute time frame, which again, where the big boys go and take their money to play, because this is trading dozens of millions of dollars as opposed to a couple million. But you can see the reaction there. So the names that stand out in the MJ sector, ACB is easily the lead Canadian MJ bull with its significant move up. 585 to 740 is nothing to sneeze at as far as the amount of gains. 30% almost. Higher low everyday pattern and just positioned well comparative to peers. 774 key resistance. If we reject, it's another big inverse head and shoulders to potentially be watching. For the USMJ space, TCNNF, which just closed a merger to become a much bigger company, they have been standing out as a bit more bullish on the USMJ side of things. And a break at $30 would be very notable. And bulls ensured a strong close today. Some big bids showed up right at the end of the day. So that has me confident. I do have a TCNNF position now. I had an MSOS position over the past couple of weeks. And yesterday I grabbed some TCNNF because I liked the bid support and I liked the relative strength comparative to the sector. And again, positioned well if the broader market bulls can establish a base and see bounce follow through. And a break at $30 on TCNNF would just continue to move us off that low, hopefully setting a monthly higher low. Lower high pattern 6 months in a row. And if we break $30, that pattern breaks. The VIX, 4-hour equilibrium we'd be keeping an eye on. A lot of people like to say VIX doesn't have support and resistance, but this is a very clear equilibrium and it's playing right off support. So shut up. So 2060 is a key level. We bounced off 2062. And anything under 2453 is just a 4-hour lower high. So keeping an eye on this tightening range, which favors the bears as long as we're this much closer to support than we are to resistance. And watching that tomorrow. And it's not surprising that the VIX is in a 4-hour equilibrium while the S&P 500 futures is in a 4-hour equilibrium. The dollar is trying to form a daily higher low. It's a daily inside bar right now. 4-hour trend change needed to the bulls. It's trying to shape up. And if the 4-hour trend change confirms, we will zoom out. The daily higher low will be set, and we'll be looking back at the recent high of 94.50. Metals starting some consolidation today. Not significant at this point, but watching to see whether or not the dollar can confirm the 4-hour uptrend, because the metals are close to confirming 4-hour downtrends if that takes shape. Oil continues its strength, breakout mode, and again, the lack of resistance on the continuous futures contract for oil. Once we got over 77, there was not much nearby, and bulls making quick work of 78 and 79. Lots of space for a daily higher low. Natural gas, very impressive. So in the video, I guess it was yesterday, but we were watching this downtrending resistance line and this uptrending support, and the takeaway was, as long as the bulls keep putting in 4-hour higher lows, they are going to keep control here. And that's what they did. They set another 4-hour higher low and then broke out of this tightening pattern and hit a new high. So even now, anything above 475 is a 4-hour higher low. 575. No, 4. Let's try that again. Anything above 570 is a 4-hour higher low. So the bulls have plenty of space to maintain those 4-hour higher lows, and very significant strength still in the energy commodities. Watching some of our beat up, oversold bounce names. So FDX getting its daily bounce going finally. The broader market being a big factor in that. We dropped to a lower low first thing and then a V-shaped recovery. Didn't make an entry because I was live streaming and a bit distracted. I wasn't watching it. But the signal, and if you've been following along, you know we've looked at the signal in the past where there is higher volume after the first 10, 15, 20, 30 minutes of trading. When you see volume like this stand out, whether it's bull or bear, it's a big signal, because the vast majority of the time, you're going to look like yesterday, where the highest volume is at the open, and then it slowly drifts off for the first 30, 60 minutes of trading. So when you open with the highest volume, and it's much lower volume, and then huge volume surges in, it means pay attention. And in hindsight, just entering on that signal would have given a great entry. And by the time I looked, the breakout was already in place. I said, well, I'm going to make an entry on the next 5-minute higher low. And then we just ran for another 45 minutes with no 5-minute higher low. Stair step pattern would have been a decent short. Higher low every 5-minute candle. That pattern breaks at 225.49. If I short, let's say I get filled at 225.45, place my stop over 226. Let's say I place it at 226.45. I'm risking $1 close to stopping out, but wouldn't have. And then we follow through. And if I exit that trade, I could lock in some profit. If I exit half of that position, I wouldn't have stopped out. It wouldn't have been much of a winner. But bottom line is, it was a decent stair step signal. Just a 1% pullback, so not a whole lot of opportunity, but it wouldn't have been a loser. Other than that, the other names, ADBE, waterfall drop on the daily. It's a daily inside bar. Lower high every day for the last 8 days in a row. Keeping an eye, if the broader market can get some bounce follow through, ADBE is going to try as well. Other than that, our lead bulls, Netflix. Netflix has stood out as a lead bull for a long time. Big breakout today, all-time highs. Just positioned real well for any broader market strength. The weekly bull flag confirmed long ago, and we're just getting very notable follow through. The other name that's been standing out stronger overall has been Tesla. Got to be a little bit cautious of Tesla right now for a number of reasons. The first is what? Red today on a green big market day. That always stands out. And you could say, well, we've been green while the market's been red. Absolutely. But it is a potential rising wedge. The bull break with a lack of follow through just has me a little bit cautious. And if I were going to draw a rising wedge, that's how I would draw it. And a break of 763.59 would be the first little initial red flag as far as losing the daily uptrend. And I'm about to go have dinner with a friend of mine, a good friend who's got $1 million call position on Tesla for, I think, March. Don't know the strike. And I generally don't try and give him too much advice because I am way more conservative than he is. And he's gotten some big wins by being real aggressive. All right. Do good things. Thanks for tuning in. bulls must prove it tomorrow with follow through, is really everything in summary. See you tomorrow.